Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi.
This is actually a pre-recorded show. And Garth, we're going to take a little bit of a look back at the year that's been, and it's been very interesting for the portfolio in that it started out really, I think it was extremely frustrating. Not much happens. We lost out. Trades that we picked didn't do well, and then latterly it's come right.
Yeah, that's right. It's been it was a very frustrating start to the year, and I think some of the viewers even maybe got the impression that I'd lost the magic touch or something. I had my own doubts, to be honest, at times, but we were persistent in the methodology that we follow, and it's worked, it's paid off, and that I always believe that the principles that we approach this show with ultimately will work. You're going to get some trades wrong here and there. But ultimately, the principles that we use on this show do work, and that's what this show is all about. It's about promoting proper trading principles and helping the viewers to become successful traders ultimately. Well,
as you've said consistently over the last few years, and experienced traders that I've spoken to, if you can get 60% of your trades right, you're doing better than average, really.
Absolutely. If you can get 6 out of 10 trades right, and if you can make sure your risk to reward ratio is favorable on your winners versus your losers, then you've almost got a guaranteed recipe to be successful as a trader. Yes, there will be times when it's difficult, like we saw at the beginning of this year, but ultimately, if you can get those numbers, like we've just said, then you're almost guaranteed to be successful.
And just before we get into the graphs that you want to bring up, as you said, it's very important to stick to your methodology or have a methodology, because I suppose at some point when you lose confidence, if things aren't going well, or if things are going too well, you can kind of abandon either and get maybe too reckless or too pessimistic, and then you make really stupid trades or bad decisions, or you stop running your stop losses, or like you just let everything go and everything go completely pear-shaped.
I think if I have to say what one and the most important word in the world of trading is, it's discipline. You have to be disciplined about everything you do. You have to be disciplined with your stop losses. You have to be disciplined with your position sizing. You have to be disciplined with what sort of setups allow you to do a trade. And don't just throw the rule book out the window when things get tough. And likewise, don't throw the rule book out the window either when things are going really well. The best traders in the world generally are quite even-keeled people emotionally, and that reflects in their trading. They don't get massively depressed when things are going badly, and they don't get massively exuberant either when things are going well. It's just about chugging on, and it's about consistency.
Okay,
and
so
that's what we try to preach on this show.
Not always very easy, but there you go. So this half-year review, this first chart that you've got up, Garth, take us through it.
All right, so this is basically a summary of the year to date, as it's been. We're just beyond the half-year stage for 2013. We've done 26 shows for the year to date. We've traded 14 times in this year. 9 of those trades have been winners, and 5 of them have been losers. So that's not a bad win-to-loss ratio. Our average risk that we've taken on all our trades has been 1.5% of our trading capital. The average reward that we've made on our winning trades is 4.79%. The total return for our portfolio for the year to date after 6 months of trading is 32%. And the JSE All Share Index over that time is basically flat. It's up 0.35%, excluding dividends. So if you added dividends on there, you probably find it's up somewhere between 1 and 2% for the year to date. So we've way outperformed the JSE All Share Index on this show.
Yeah, and as I say, it's really happened latterly. Garth, and if you've got that in histogram format,
yes,
show us those trades.
All right, so this is our histogram of all the trades that we've done for the year to date. There's 14 trades here, and basically to explain it to the viewers, what you've got on the left-hand axis here is the reward or the risk or the loss that was taken on all trades. So that's 0% over there, and that's a positive return, and below 0 obviously is a negative return. And then along the bottom axis here, these are the stocks that we actually traded in. Now, the red blocks that you can see on this chart indicate the risk that I was willing to assume on each of these trades up front when we went into the trades. And you can see at no point did we ever risk more than 2% of our trading capital on any trade. The blue bars are the result. So where you've got a tall blue bar like that one over there, for example, that's a nice profitable trade. The ones that point to the downside, those are the losing trades. Now the idea is when you've made losses, you should never lose more than the risk that you assumed. And you can see that was pretty well executed here. Here and there we've made a slightly bigger loss than what we were willing to risk. But bear in mind that's often made up of transaction costs and a little bit of slippage in trying to get out of the positions that we traded. But for the most part, we never saw any significant losses that were much bigger than what the risk was that we were willing to take on. And then we've got some nice tall bars to the upside which indicate the profitable trades. And that's ultimately what you want as a trader. You want your histogram to look like the Manhattan skyline with lots of tall bars to the upside. Because if you've got a healthy histogram, you've got a healthy trading account.
Yeah.
Now, these trades are all pretty much in order, and you can see that we certainly did go through a slump for a while at the beginning of the year where we just had a string of losses, which was exceptionally frustrating.
And as you say, you are actually a very even-killed character, but even you looked rather harried, I have to say, with hindsight.
Yeah, it was very frustrating. It is frustrating to come on national TV and every week come back and say, sorry, but we got it wrong again and again and again. But then things turned around for us in about mid-April. And you can see we've had a string of winners since mid-April. We've made good money on a New Gold Platinum trade, on Aspen, on Remgro, on the top 40. And then we've still got 2 open trades at the end here in Grindrod and Sasol, which haven't yet been realized. So those are showing up as small profits at the moment, but could potentially be bigger if things work out.
And I suppose the point here is that even though you got trades wrong, they didn't wipe you out, and you still actually have produced a return of 30+% for the portfolio.
Yeah, well that's it, and that comes back to the whole point about being consistent and being disciplined. I've certainly made some mistakes this year in terms of the picks that I've made and the stock calls that I've made. I've got some of them wrong. I mean,
okay, well, on that point, which would you say are the stocks that you got really wrong?
I think the ones that I got the most wrong were African Rainbow Minerals, which we'll talk about just now. We'll review a couple of our trades, but I got that horrendously wrong. Standard Bank I got wrong. And then there were others that I got wrong, but would have later turned out right. But we'll dissect those in a moment. But I think the point is to realize that as a trader, nobody in this world ever gets every single trade right. It's just not possible. So for that reason, we always go in with a stop loss. We always go in with a well thought out plan in terms of sizing our positions, and then we execute it according to the plan. And it's a reality that you're going to get some trades wrong, but the key to success as a trader is that you have to make sure that when you're wrong, you cut those losses quickly and you get out without a big loss. And when you're right, you try and maximize the gains. And I think we've done that fairly successfully over here. And you can see just introducing those yellow lines onto the chart there. The bottom one indicates the average risk of 1.5% of capital on all our trades. And then our average reward through all of those winners is 4.8%.
And then Garth, relative to the All Share Index,
well, this is how it looks. So this is now looking back at 2013. The yellow line indicates the Traders Corner portfolio, and the blue line indicates the JSE All Share Index. And remember, we start the year with 250,000 Rand at the beginning of every year, and then we try and trade that up throughout the year. And what happened, certainly through those first couple of months, you can see that we actually underperformed the All Share Index slightly on our portfolio, but tracking it relatively closely. And then all of a sudden, come sort of late April, early May, we began to open up a gap on the market when we started to get a string of winning trades under the belt. And since then it's been fantastic, and our portfolio is up 32% versus the market, which is flat for the year. So you can see the nice outperformance that we've managed to enjoy over there.
Okay, Garth, going back to the point of a couple of the trades, if you had to isolate some of the winners and some of the losers, or the trades that made you gnash your teeth and wail, which ones were they?
All right, well, I've got 6 that I'm going to look back at. So the first 2 are winners, and then I'm going to look back at 4 of the losers. So if we look at the first of our winning trades, of our successful trades, it was PPC, which we did in February. And what I'd identified here was that there was a nice steady rising trend, but we had a falling wedge pattern within that rising trend. And those are typically bullish continuation patterns within a rising trend. And when they break out to the top side, you usually will see a move back up to the top of where that rising wedge started. So what we did in this instance was we bought at 32.80 Rand on the breakout through the top of that rising wedge pattern. The stop loss was at 31.70 Rand, which was effectively below the lowest points in that rising wedge, in that falling wedge structure. And then I looked to run the profit up to the prior tops, which is what we got. So I sold out of that in the end at 35 Rand 40, and we locked in a nice decent profit on that.
And actually that was
trade.
Exactly when you ought to have sold out for a short-term trader.
Exactly. In retrospect, this trade actually was perfect. Everything was right about it. We sold out at the right time. I can't really fault this in any way. So that was a great trade.
And what about the next one, Anglo American?
Anglo American was a short position, and this has been amongst the weakest stocks in our resources sector this year. What I'd identified was that the stock, within its downtrend, had been consolidating in what was looking a bit like a sort of a messy bear flag type of pattern at that point in time. And there was also a major level of resistance going through here at 240 Rand, which went all the way back to 2009. So my feeling was that there was, a lot of stale bulls were likely to want to sell this stock. And in the end, I shorted for our portfolio at 231 Rand 90 with a stop loss at 242 Rand. And I ended up buying back that short position at 202 Rand ultimately. Now it has gone lower. It's been down to about 185 Rand since then. So we could have actually made more on that trade. But nonetheless, it was a good trade and it did work out. We did make quite a decent profit on it.
Yeah. Okay, so those were two exemplary trades. What about trades that wanted to make you throw a few things at your trading screen and slam the phone down in a rage?
Well, there were a couple. So the first one was Aspen. This was a big disappointment for us. The stock had been trending higher. I mean, this is a stock that was so good to us in 2012. It's got a beautiful rising trend. It's such a great company. And it pulled back to that uptrend. And at this stage, I thought, well, the trend is your friend. You've got to be buying it. And I bought for our portfolio at 165 Rand when it pulled back to that trend line. And it then went sideways for a while, and it actually broke slightly below our upward trend over there. And in the end, I didn't wait for the stop loss at 159 to execute. I actually cut it early because we had been holding it for about a month or so. Nothing had happened, and I figured let's execute a time stop loss on this trade, and I cut it at 161.50 just before it had a mammoth rally after that. So, I mean, this was exceptionally frustrating, and I should have been more patient here. And I should have, in retrospect, our original stop loss would have actually been triggered at 159 anyway. But, when it broke out over here through, I think it was about 160 Rand or thereabouts again, it broke out through some resistance. That should have been our time to get back in, and I never did. So, a lesson learned.
Yeah. What about some of the others? You mentioned African Rainbow Minerals.
Yeah. So African Rainbow Minerals is on the screen here now. And early this year, I was actually quite bullish on the resources sector. And it wasn't just me, thankfully. A lot of other market commentators and participants were also bullish on the resources sector at the start of this year. And we had reason to be. Things were looking good. The trend was up. You can see from August of last year through to the beginning of this year, that trend was nice and moving higher on African Rainbow Minerals. And the stock had consolidated, it had pulled back to that rising trend line, and I felt that was the time to get long of it, and I bought for our portfolio at 201 Rand a share with a stop loss at 194.50. Now in the end, the stop loss was hit. We got out at 194.50, and you can see what a disaster it's been since then.
Yeah, I mean, and if you hadn't been stopped out.
Yeah, it's actually traded down to under 150 Rand recently. So if we hadn't have executed the stop loss here, we would have lost a hell of a lot of money.
Yeah.
So in retrospect, yes, we lost money on the trade, but actually it was successful because we stuck to the strategy, we got out when the stop loss said we should get out, and we didn't lose too much money.
And very quickly, Netcare and Standard Bank.
Yeah, Standard Bank, I was looking for a breakout through 120 Rand, which is big overhead resistance here. And I bought it at 115.59 with a stop loss at 112 Rand. In the end, I ended up stopping it out at 114 Rand 81, which is a bit early. But you can see it's drifted lower since then. And so, again, good thing we got out of that trade.
And Netcare was something that I suppose you cut out of too early.
Yeah, Netcare I got out of. Well, initially we bought the breakout here. There was overhead resistance at 20 Rand and 20 cents. We bought the breakout through that resistance with a stop loss at 19.65. And then it just dribbled along and drifted sideways and lower for a few weeks and ended up stopping out at 19 Rand 60. And then it did rally eventually after that. So I suppose the lesson here was I tried to be patient. I tried to be too patient in retrospect, and I ended up waiting and holding it all the way till the stop loss got hit. Maybe I should have raised the stop loss to our entry point and then looked to re-enter at a later stage. A pity, but again, that was one that didn't work out.
Yeah, well, not everything's going to work out. And then very lastly, next courses?
Yeah, I've got a Understanding CFDs course on the 8th of August, an evening course for 2 hours, and then a high probability trading course, which is an all-day course on a Saturday, the 17th of August. Both of those in Johannesburg. If anyone's interested in attending, email me, garth@traderscorner.co.za. I'll send you the information.
Okay, great. Garth, we'll leave it there. Thanks as always for joining us on the show.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.